Afternoon, everyone. On behalf of Motilal Oswal Securities, I would like to welcome you all to fourth quarter and FY18 annual results conference call of Maruti Suzuki. We would like to thank the management for taking time out for the call. I would now hand over the call to Mr. Nikhil Vyas. Over to you, Nikhil.
Thank you, Janesh. Ladies and gentlemen, good afternoon once again. May I introduce you to the management team from Maruti Suzuki. Today we have with us our CFO, Mr. Ajay Seth, Senior Executive Director Marketing and Sales, Mr. R.S. Kalsi, Executive Director Corporate Planning, Mr. A.K. Tomar, Senior Vice President Finance, Mr. Pradeep Garg, Vice President Corporate Planning, Mr. Rahul Bharti, Vice President Finance, Mr. Sanjay Mathur. The concall will begin with a brief statement on the performance and outlook of our business by Mr. Seth, after which we will be happy to receive your questions. May I remind you of the safe harbor? We may be making some forward-looking statements that have to be understood in conjunction with the uncertainty and the risk that the company faces. I also like to inform you that this call will be available at our website. I would now like to invite our CFO, Mr. Seth. Over to you, sir.
Thank you, Nikhil. Good afternoon, ladies and gentlemen, and welcome once again to Maruti Suzuki's conference call. India's passenger vehicle market grew at 7.9% in 2017-18 against 9.2% in 2016-17. Among the three broad segments of the industry, the utility vehicle segment, which accounts for about 28% of industry sales, grew by 21%. The other two segments, passenger cars and vans, grew by 3.3% and 5.8% respectively. Demand for diesel models continued to see weakness, and their industry share declined marginally from 40.5% to 39.9%. The company, with its strong portfolio of 16 models, posted a volume growth of 13.8% in the domestic passenger vehicle market, including the LCV. The company's domestic sales growth stood at 14.5%. This was the fourth consecutive year when the company posted double-digit volume growth. With Suzuki Motor Corporation taking responsibility for incremental capacity expansion, the company was able to focus on other key success factors. The company's new sales channel, Nexa, showed strong growth and contributed 20% of the domestic during the year. During the year, the company initiated the revamp of the existing sales channel under the brand Arena to offer customer a superior experience. The company continued to expand its network at a fast pace. During the year, the company added 315 sales outlets, including 140 sales outlets of the commercial channel. In addition, 200 new service workshops were set up. The company strengthened its efforts to buy land parcels for sale and service outlets. The company launched two new products, the new Desire and the new Swift. The company also introduced facelifts of S-Cross and Celerio. For 5 of the models, Brezza, Baleno, New Desire, New Swift and S-Cross, customer orders were higher than planned, and the company stepped up efforts to improve availability of these cars. Greater reach, a superior customer experience, and exciting products enabled the company to attract more customers and grow faster than the industry for the 6th time in a row. In 2017-18, the company achieved leadership position across all the three subsegments of passenger vehicles: passenger cars, utility vehicles, and vans. Incidentally, all the 5 best-selling models in India were Maruti Suzuki models. Also, the company achieved leadership position in export of passenger cars from the country. In the LCV segment, during the year, the company was able to sell 10,033 units of Super Carry. The brand was adjudged Commercial Vehicle of the Year at the Apollo CV Awards 2018. With a commercial network of 190 outlets in 159 cities, the company is in a position to expand volumes in this category. The company ensured smooth transition to the new GST regime by proactively training business partners and hand-holding them during the transition process. The company and all the partners were GST compliant as per the timeline. In the last 3 years, there is a noticeable shift towards petrol vehicles, primarily in the compact segment. The company in the petrol vehicle segment posted a sales growth of 16.8% in the petrol segment and 7.1% in the diesel segment. Withdrawal of incentives for hybrids in the GST regime also contributed to a shift in consumer demand towards non-hybrid variants of Ciaz and Ertiga. During the year, the company continued its efforts to strengthen its synergy with finance partners, resulting in the highest ever finance penetration for the company at 80.5%. With the rise in commodity prices, the company undertook major cost reduction efforts to minimize the impact on profit margins. The net sales and operating profit for financial year 17-18 stood at rupees 781,048 million and rupees 93,036 million, registering a growth of 16.7 and 20.1% respectively over the same period last year. The growth in operating profit was on account of higher sales volume and cost reduction efforts, partially offset by adverse commodity prices. Going forward, in our view, operating profits would be a more appropriate parameter to gauge the company's performance as the contribution from SMG to the overall production becomes significant. We can now take your questions, feedback, and any other observations that you may have. Thank you.
Thank you, sir. Ladies and gentlemen, we will now begin the question and answer session. If you have a question, please press star and 1 on your telephone keypad and wait for your turn to ask the question. If you would like to withdraw your request, you may do so by pressing star and 1 again. The first question comes from Mr. Binay Singh from Morgan Stanley. Please go ahead.
Hello team, thanks for the opportunity. To give us a breakup as to what were the key elements in that. Was there any one-off, anything relating royalty, rollback, provisioning or auto expo? And the second question is on royalty that, in the last call we spoke about royalty rate being reduced, and there's also a lot of media articles about royalty shifting to INR. So any update on that?
One of the reasons for other expenditure going up is there is a freight expenditure which is now being reflected in other expenditure. Corresponding freight recovery of that is reflected in other operating revenue. So roughly about 180 crores in this quarter is the freight expenditure, for which you will find a corresponding recovery in other operating revenue. The other reason is there was an exchange variation on royalty of about 100 crores in quarter 4. And power and fuel, because of the crude oil going up, the power and fuel bill is also up. So these are broadly the reasons why other expenditure was up.
And on royalty, could you give us a royalty amount also, or any rollback of or any sort of one-time payment for previous quarters or so?
There may be a lot of quarter-to-quarter variations on account of exchange rate. I think the way to look at it is that the full year royalty percentage to net sales, including the impact of Gujarat models, is 5.4% this year, 5.4% of net sales, compared to 5.8% last year.
Okay. And how much was it in this quarter?
5.7% was the royalty for this quarter, and largely because the exchange rates were adverse, and there was also a corresponding third quarter royalty which had to be reinstated at the current exchange rates.
Correct. And with regard to the second question, any update on the revised royalty contracts?
No, this quarter we had announced that there's a new method of calculation, and it was yet to be approved by Suzuki. That approval has happened now.
Okay. And can you share the details of that?
No, it's what we have already shared. One, for all new model agreements starting the Ignis, the royalty will be in INR instead of Japanese yen. And of course, the expenditure which we do in India on R&D, that will be reimbursed with some margin. And after some time, once a particular level of volume is achieved, the royalty rate will come down.
So that, so in a way, could you then directionally give us a sense as to what will be the royalty percentage, like 3 or 4 years down the line?
Because, it should come down. Directionally, it should come down.
Great. I'll come back in the queue for follow-up questions.
Thank you, sir. The next question comes from Mr. Sahil Kedia from Merrill Lynch. Please go ahead.
Thank you for this opportunity. 2 questions. Can you give us a sense of what is prevailing in the Q4? And in terms of demand, we have seen a pretty good uptake because of share of financing going up. Just to also reiterate how much capacity...
Sahil, you're not audible. Sahil, you're not audible.
You hear me now?
No, we can't hear you clearly.
It is better.
So your voice is breaking, sir.
You have to maybe try some other phone connection.
Sure, I'll come. Hello?
Thank you, sir. So we will move on to the next question, which is from Amin Pirani from Deutsche Bank. Please go ahead.
Hi, sir. Thanks for the opportunity. So just a clarification. You said that there is a freight expenditure for which there is a recovery in income. What is this regarding, if you can clarify?
For the new models introduced, we had moved on to uniform pricing all over India. So the freight expenditure varies from destination to destination, but the recovery is uniform on a weighted average basis. So accounting standards don't allow an offsetting unless the recovery and the expenditure are equal. So that's the reason we had to move the recovery part to other operating revenue, and the expenditure part remains in the other expenditure.
Okay. Understood. And can you give us the average discount per car for this quarter?
This quarter, it's 13,880 rupees.
Okay. And just one question. So this SEBI circular, on the royalty cap of 2% and the requirement for, shareholder approval, have you heard from, them as to what is the timeline for this? Does it apply on existing models, future models, and, what will be the procedure going forward, if you can give any clarification?
No, as of now, we have not heard or seen any notification to this effect.
Okay, so as of now, everything is status quo?
Yes.
Okay. Thank you. I'll come back in the queue for more questions.
Thank you, sir. The next question comes from Mr. Sonal Gupta from UBS. Please go ahead.
Could you give the export revenue?
Sonal, the same intermittent signal is coming like it was coming in Sahil's case.
No?
No, we are not able to hear you.
We can't hear you.
Oh, okay, I'll just pick you.
I'm sorry about that, sir. I have to move on to the next question. The question comes from Ish Goel from Kotak Securities. Please go ahead.
Thank you, sir, for taking my question. Sir, you said that there are 2 reasons for such increase in other expenses. One is that freight cost element, and one is the royalty increase, which is so it's 100 crores increase on a Q&Q basis, right? Just wanted to understand, even if we adjust for volume, still there is, the other expenses are like 300, 400 crores higher than what it should be ideally. So can you just give us some more sense? Is there any, substantial increase in some other heads which we are missing?
No, the other reason was that advertisement expenses are also up because there was Auto Expo along with the Swift launch in this quarter. So that's the other reason why you find other expenditure up.
So, sir, so basically, if you look at the full year other expenses to net sales around 12.5%, if, excluding any variations in the year net, should we be comfortable with that kind of number, or how should we look at it? Because now I think launch is also not that significant in FY19.
See, you should, to my mind, you should look at the full year numbers. That will give you more meaningful information rather than looking at quarter, because there are certain activities that may get shifted from one quarter to another quarter. So, if you were to look at our full year numbers, you will find that to be a good benchmark or a reference point to see how the cost is moving in the future, which I think is reasonably okay, because certain quarters were quite low in terms of cost because the activities were to happen in the third quarter or fourth quarter, etc. So please look at full year numbers. Don't take a cue from a fourth quarter number that the cost is therefore moving in a particular direction, because certain activities were one time. There were certain activities which will be repeated, but the cost may or may not be the same in the subsequent quarter. So I think, for example, exchange rate, we talk about 100 crores. But that is a one-time kind of a thing. It may happen, it will happen. So some auto expo will not happen every year. So some of the time. Regrouping is a big amount which is unnecessarily distorting the amount of other expenses. So some of these things have to be looked at from a full year perspective and not from a quarter perspective.
Just to supplement, if you look at the full year other expenditure as a percentage to net sales, it's down by some 0.2% as compared to last year.
Yeah. Sir, my second question is basically if you look at the gross margin, there is a reduction on a Q-on-Q basis, and this has largely come from discount reduction. Can you also tell us what was the price increase during the quarter and what is the commodity cost impact in this quarter?
Price increase impact has been minimal. I mean, not much in this quarter. The commodity impact has been about 1% in terms of commodities going up. Commodities impact, in fact, for the full year has been very steep for us. We have, I think, mentioned earlier that about 700 crores impact has happened in commodities over this year compared to last year. So commodities have been bothering us for quite some time. If it was not for our program on the side of cost reduction and other initiatives, we would have been very badly hit on the material cost to net sales margin. So we, in spite of high commodities, we have still been able to kind of lower material cost to net sales ratio or keep it where.
And you have not taken much price hike, right, sir? You have not taken much price hike this year. So basically, it's mostly related to product mix.
It's mixed and cost reduction, both taken together.
So, sir, I mean, just last question. Basically, if I look at your competitors, like even Tata Motors, Toyota, everybody is taking price hikes. They've taken 2 price hikes in January and April. Why is our company with, capacity not being there? Why is the company not taking pricing up of 1-2% to offset the commodity cost hike?
See, our focus is always, the same customer. So, point is, if there is a slowdown in the commodity prices, we always try to, absorb it and not pass on to the customer. So, we do not really want to exploit this opportunity just because customers, like our vehicles and there is a waiting, so we increase the price. That's not, our policy as a company. So, my idea is to, keep the price increase at a, when it becomes, extremely necessary, then only we go in for a price increase.
Okay. Okay, sir. Thank you.
Thank you, sir. The next question comes from Mr. Pramod Amte from CIMB. Please go ahead.
Yeah, hi. So one, you have said in the notes that you have adjusted or provided for 250 crores for this Haryana land issue. How much of that is accounted in the interest expense and how much of that is in the other expenses?
The entire amount of 254 crores that we mentioned in the note is accounted for in the interest expenses.
Okay. Nothing in the other expense per se.
No.
And how does the counterbalance in the balance sheet for the remaining part of the 900 crores minus 250?
That amount has been capitalized under land because that was the acquisition cost difference, so that's been capitalized.
Okay. And can you give directionally, how are you with the new royalty structure being passed by the Suzuki for you? What are the charges for new models? Like Ignis, you said it has come down. So what are the charges for the same in INR as a percentage of sales? And when will you hit the milestones like 4% or 3% as a company per se on the royalty structure?
See, we answered that in the beginning. For all new models starting the Ignis, the royalty will be pegged at in INR, Indian rupees. And after a particular threshold volume is achieved, the royalty rates will come down.
Would you be comfortable disclosing versus the company average? Because we need to build that in the model. So how should we look at it?
It would depend on a lot of factors, particularly product mix. And when the new models will be launched, what will the volumes, how much volumes they will do. So it's difficult to give a guidance on the blended average figure in the future.
Sure. And with regard to Arena rollout, what are the plans for the next 1 year or 2 year? How many of them you want to convert? One. And second, drastically alter the profitability of dealers, and hence you may have to accordingly compensate them for the commission side.
Well, Arena rollout, there are two aspects of it. One is, whatever dealers, new dealers are being appointed. So these guys are, coming out with the Arena outlet straightway, that kind of, this in CI and all. Now, second is the existing dealers who have to be, changed into Arena. So, which is relatively, more challenging work. But nevertheless, we are, working with our dealers, jointly. And it's not that we would be compensating them for this. It's a part of their own investment. Maybe some help we'll be providing them in terms of, changing the CI, etc. Otherwise, all the investment is being done by the dealers only.
Thanks and all the best.
Thank you, sir. The next question comes from Anubhav Bajpai from Goldman Sachs. Please go ahead.
Yeah, thanks a lot for the opportunity. My pertains to raw materials. Just want to understand, is it by a gross margins include, is it partly because of getting vendor discounts? Would you have achieved
we cannot hear you. You're not audible to us.
So to be a problem line. Is that
No, we can't hear you.
Let me that. Thanks a lot. I'll get back.
Thank you, sir. The next question comes from Mr. Kapil Singh from Nomura Securities. Please go ahead.
Hi, sir. Can you share the growth outlook for FY19 and terms of production capacity?
Well, most of the, experts like you, have commented positively on the macroeconomic factors. And, with the addition of, say, forecast of good monsoon by the weatherman, I think the year looks to be good. The GDP growth is also, in the right direction. So we are committed towards double-digit growth, though industry growth is, forecast at about, say, 8 to 9%. So we would try to, exceed industry growth. That is one part. Now, as far as capacities go, this year, our Gujarat plant would be operating for the full year on double shift at, with full capacity. So compared to 160,000 that we got last year, this year we'll be getting about 250,000 from there. Plus our second line will start around January. And third thing is that, I have, a lot of confidence in my production counterparts at Gujarat, at Gurgaon and Manesar. We keep on doing, innovations and get incremental, numbers from them. So we are, on track, and whatever we are committing for double-digit growth, we'll be able to achieve it.
Secondly, I wanted to check in the notes we have mentioned that there will be certain investments being made to mark the 35th anniversary, which will be 1% of profit after tax to Employee Welfare Fund to promote scientific research. So these will be part of CSR spend, or they will be incremental?
So this is not CSR spends. Money that we will appropriate out of our profits towards two funds, one fund and one trust. One is for the Employee Welfare Fund, and there will be specific objectives which will be set up for it. And the other is for the Scientific Research Trust, which will be established. So the board today, in principle, approved these two. However, we will have to again go back to the board in July board meeting with the details of these two fund and trust, and then seek a formal approval.
Okay, but correctly, these will not have a P&L impact.
Yeah, so we are examining it, but hopefully we should be able to appropriate it from the profits and create a fund and reserve accordingly. Okay.
And lastly, I wanted to check what is the capex we have done and how much of that is land?
Capex this year has been 3,400 crores.
Okay.
And the next year plan is about 5,000 crores of capex.
Okay. And land out of that?
We have done land this year of about 790 crores.
Okay.
And our next year plan is about 1,000 crores for acquisition of land.
So bulk of the increase is going in which area, sir?
Yeah, right. New models will have a sizable amount. There will be some expansion on engines, etc., where we need more capacity. So there will be some spend there. Land, we have already mentioned to you, there will be routine maintenance capex, and then there will be some expenditure on the R&D facilities. So these are broad areas where we'll be spending money.
Okay, and just one clarification, we had mentioned 100 crores royalty impact due to exchange rate. Is this for prior period or this is for, for Q4 and prior period?
This is Q3 and Q4 because this is that royalty has to be for Q3 has to be also reinstated in Q4 because it's actually paid in May. So the impact of Q4 will always have an impact of a prior period. Or Q3, which is Q3.
Is it possible to quantify Q3 impact?
So the impact together is about 97 crores, which is, I think, if you can actually say it is half impact for Q3 and half impact for Q4.
Okay. Okay, sir. Thanks.
Thank you, sir. The next question comes from Mr. Jinesh Gandhi from Motilal Oswal Securities. Please go ahead, sir.
Hi, sir. My question pertains to the demand environment. You indicated demand has been growing well for the industry. How it would be split between urban versus rural? Is urban still growing faster than the rural, or you're seeing some recovery in urban as well?
You see, for the year gone by, we had about 15% growth in the rural sector, and we have a penetration of about 36% in the rural market. And moving forward, I think we feel that, same ratio would be maintained, that kind of growth momentum as well as the share of rural markets.
Okay. Second question pertains to the staff cost. If you see in this quarter, staff cost has gone up quite substantially. So are there any one-offs there, or it's largely year-end related provisionings and revisions?
So the one-off is that the Gratuity Act had changed. So because of the limit increase from 10 lakhs to 20 lakhs, so we had to do an actuary valuation, and therefore, so this will have an impact actually for the full year because it's being done in the fourth quarter. So that's one impact. And second are that there are certain provisions which are made in different quarters. So the provision in quarter 4 was shade higher than provisions which are made in shade quarter 1, 2, and 3. So I think these are two reasons. And you please look at, again I'm saying, please look at employee costs on a yearly basis. It will give you a better reflection than only looking at a quarter, because quarter can tend to have higher provision in certain quarters compared to other quarters. So therefore, if you were to look at our employee cost, it is 3.6% for the full year, and it's similar to what it was last year.
Right. And sir, what would be the export revenues for the quarter and for the full year?
Revenues for the quarter, 16,250 million rupees.
250 million, okay. And for the
Hello?
Can we have the next question, please?
Yes, sir. Sure, sir. The next question comes from Jatin Chawla from Credit Suisse. Please go ahead.
Yeah, hi, good evening, sir. Can you share the Gujarat production number for the quarter?
We did about 157,000 from Gujarat. For the quarter? 58,000.
You are
it was
now
58,000
at 20,000 per month.
Yeah. That's right.
Just a clarification on the Toyota supply arrangement that was announced. One is there a cap on how many units you will supply to them because you are capacity constrained?
See, it's not happening in the near future, so as of now we are not too immediately concerned about it.
Okay. And in the future when it happens, will the transaction be routed through Maruti or is it Suzuki Gujarat directly supplying to Toyota India?
Maruti is Suzuki in India, so it will be from us.
Okay. And just one quick clarification on the interest cost amount for the land transaction, the compensation that you've paid out. It seems the total amount is some 375 odd and 250 crores has been budgeted in this quarter. Will the remaining also flow through to the P&L or is that directly going to the bill?
Jatin, we had earlier, about a year ago, made a provision of the balance amount in the books already. This is the incremental amount that we were required to provide. So the entire 350 has been provided in two lots. One was provided in 15-16 and the other amount is being provided in this year.
Okay. So there is nothing pending going forward. And just one quick clarification on the employee cost bit. I think on the television, chairman mentioned that there was 100 crore additional provision on variable cost. Now, it's from what you're mentioning, it seems it is also pertaining to prior quarters. So that is not something that we should take as recurring, right?
No. So, you have to kind of even it out and see quarter-wise. And some quarters may have shared higher provisions, some may have shared lower provisions. So it's like estimates. Sometimes, you create an estimate and then you have to change it. And also, as I mentioned about the gratuity thing, because that's also an amount for the full year, and it's also one time. So, as far as you are concerned, I don't think you should take it as a recurring kind of an event.
Okay, great. Thanks.
Thank you, sir. The next question comes from Mr. Raghu from MK Global. Please go ahead.
Thank you. Can you share the spares?
Sorry, your voice is breaking. Yes.
The spares revenue.
You are not audible, sorry.
Hello.
Am I audible now?
I'm so sorry about... Yes, sir, you are audible. Can you please go ahead?
Sir, revenue for FY18?
Again, intermittent. We are not able to get the signal.
I'm so sorry about that, Mr. Raghu. I'm moving on to the next question. The question comes from Suraj Chadha from IIFL. Please go ahead.
Thank you. Royal comments.
I'm sorry, intermittent signal again.
Hello?
Hello?
Mr. Suraj?
Can you...
No, intermittent signal again.
I'm so sorry about that, sir. Please, Mr. Suraj. We have the next question from Binay Singh from Morgan Stanley. Please go ahead.
Hi, team. Just on the raw material side, is the bulk of raw material hit in the current quarter, or how do you see the raw material expenses in the coming quarter? Like, have you already taken majority of the hikes?
No, prices are likely to further go up. We had taken certain hikes last year, but I think the way some of the commodities, especially steel and some other metals, have been moving, directionally we see a little bit of pain there. And some commodities we can control and hedge, we are doing that. But bulk of the commodities where we cannot hedge is something we are worried about. Especially steel forms the bulk. But the indication given by our supply chain team is that the hardening of commodities is expected, and you might see more price increases from vendors, which will have to come.
Right. Now, this year you have not taken any price hike, right?
We haven't taken any, maybe a very small price hike, if at all we have taken. We haven't taken any price hike.
And sir, how would you look at urban demand? There's a lot of chatter on rural demand, but how would you see the urban demand?
Well, urban demand is fine. It's, our overall growth has been at 14.5%, and rural growth, as I mentioned, has been about 16%. So more or less, there is a, parity. There's not much of a difference.
Because if you look at growth, ex-Maruti is looking, remains quite weak. So I think, one way to read is that the franchise is getting so stronger that, the people are actually, your order book is growing, so people are waiting for it. The other would be that, that itself, that demand is, not picking up as strongly. So how would you see your order book on December quarter end versus March quarter end? Like what was the order book then and what is the order book now?
You see, we today have about, say, 110,000 bookings. And last year, around the same time, we had about 120,000 bookings, pending bookings. So point is, we have been increasing our capacity. And this year, when I say 110,000, it is on 4 models. Last year, it was on 2 models only, Baleno and Vitara Brezza. This time, it is S-Cross also and Swift as well, which is in waiting apart from Baleno and Vitara Brezza. So we are ramping up our capacities, and it is showing its effect. The waiting time for the customers is going down.
Right. And sir, lastly, in newspaper, there have been a lot of articles about Maruti starting another channel dedicated for cab aggregators. How big is that segment now for us?
No, I learned it from somebody.
Okay. But how big is the segment now for us, the cab aggregator segment, and how is that growing?
17-18, there was a degrowth on that because of, certain issues, availability of drivers. There was some unrest among drivers. And also there were certain, issues on the regulatory front in terms of, fitment of speed limiting devices. That announcement was made all of a sudden. So there were a number of factors, and there was a, degrowth last year in the aggregator segment.
So that will be less than 10% of sales for us now, right?
Well, yes, you are right. Much lesser than that.
Great. Thanks a lot.
Thank you, sir. The next question comes from Jamshed Dadaboy from Citibank. Please go ahead.
The formalization car market.
Can't hear you, Jamshed. We are not able to hear you.
Oh, is it better now? Or?
Still intermittent.
So I think there's some problem with the line.
Yeah.
Sorry about that, sir. I'm moving on to the next question. The question comes from Amin Pirani from Deutsche Bank. Please go ahead.
Yes, hi. Thanks for the opportunity again. Just going on the royalty, which you mentioned that on new models is coming down. So, since the starting point is Jan 2017, my first question is, are these reductions going to happen on a retrospective basis? And second question is, does it start from, like the new rate starts from 1Q FY19 or is it at a future date?
See, we have to keep in mind that this understanding is only on new models.
Yes.
Which are launched after starting the Ignis. So,
which would include Desire and Swift, right? Or is that not?
Yes. So Ignis, Desire, and Swift are the three models that are covered till now.
Okay.
And going forward, as we have more new models, it will keep getting incorporated on those.
Okay. But as of now, you have not incorporated that lower royalty rate in 4Q for those models, right? You will start doing that only from FY19. Is that correct?
We mentioned that this year the royalty rate is 5.4% versus 5.8 last year because of this effect and others.
Okay. Okay. So partly it is already being seen in. Okay.
Yes, partly it has already been seen.
Okay. Thank you. Thanks for this.
Thank you, sir. The next question comes from Abhishek Jain from HDFC Securities. Please go ahead.
Thanks for taking my question, sir. Sir, what is the contribution of the cab aggregators in the total volume of Maruti?
It's about 5,000 to 6,000 per month.
Oh, 5 to 6. So it's around 3 to 4%. So it has gone down. So it has gone down in FY18.
It has gone down because of certain disruptions in the business. One was, availability of, drivers with the, cab aggregators. Second thing, there was a driver unrest as well. Third is, there were certain regulations which were implemented like, fitment of speed governors, so vehicle registration was halted for a few months. So because of all these factors, there was a degrowth in this segment.
So, sir, because of this slowdown, sales of the old car is improving. So how this will impact the passenger vehicle industry in terms of the new cars?
What slowdown? I'm not able to
demand from Ola and Uber. Yeah. So there's a slowdown a couple of months. So that's why the sales of old car is improving. So how this will impact the new car sales?
Well, we are already at a growth rate of 14.5%. Despite of this, one segment there is a challenge. We always explore other segments, other markets. We do micro segmentations. So these are the efforts which we put from our marketing and sales side.
Okay, sir, can you share the data of spare parts revenue for FY18 and Q4?
We don't share specific data on other segments, so I don't think we'll be in a position to share that data.
Okay, sir. Sir, what was the fuel mix during Q4 in diesel versus petrol?
29 or 61.
Okay. Thank you, sir. Thank you, sir.
Sorry, 71.
Thank you.
Thank you, sir. The last question for the day comes from Mr. Hitesh Goyal from Kotak Securities. Please go ahead.
Sir, you said the raw material costs are likely to go up further and you'll have to give vendor increases to vendor. So will it be, offset by the internal cost reductions by the company, or company will look to take a price increase?
Our endeavor would always be to see whatever best we can do on the cost side, and therefore we'll continue to work. First, we will actually get a view in terms of how much is the raw material work going to go up by, what is our cost reduction program. So that, I think, will be our first and major focus. And any call to be taken on any other matter would only be based on, these factors. So we will discourage increase unless we are compelled to.
So basically, should we assume that the gross margins would, like last year also, you maintained your gross margins, so in spite of commodity cost increase, you can maintain that?
There are so many variables in business. I mean, you have to look at all those factors. So, to give you directionally whether margin higher or lower is a very difficult question to answer at any given point in time. We don't know where the exchange rates are going to go, because my worry today would really be depreciating rupee and yen, the way it's been, behaving compared to where it was last year. Commodities is the second area of worry. But also, growing volumes will help us, give us some leverage. there will be other benefits that we'll get from some work that we have done, and cost reduction program anyways we run in a very big way. So we will have to see combination of factors, and individual impact of those factors can only derive the margins in a quarter, and it will be visible to you quarter by quarter.
And sir, my last question is basically in Gujarat plant in first phase we saw a lot of startup costs and initial ramp up costs. Now with the second line you're starting, should we assume better operating efficiency with the Gujarat plant which can positively impact margins?
No, what we have said is that Gujarat project has in the phase 1 has 3 plants to be set up. Plant 1, plant 2, plant 3. Whereas plant 1 is over, plant 2 started now, right? So once we reach a steady state of the first phase where you are running at 750,000 full capacity, we will be in a position to compare one against the other, and I think we'll be more or less working towards a situation where we can be at the same cost. But till then there will be some element of volatility, and I think you'll have to live with that. But once we are done with, I think then you'll have more stability.
Okay. Great, sir. Thank you.
Thank you, sir. That will be the last question for the day. Ladies and gentlemen, this concludes